So welcome to today's event. I'm sure you guys know the market has been crazy. So we've brought in our top guy, Scott Redler, and he's going to break down the action for you. So we're going to get to Scott very quickly. So please read the disclosures on the screen. We just want to make sure our legal team is happy with everything. So just a quick housekeeping items. We are recording. You will get a replay. Turn off your TV, your smartphone, any other distractions, because we think Scott's lesson is going to be really impactful. And just an FYI, lots of internet-related things are running really, really slow the last few days, I think, because everybody's online. So the fewer things you have running in the background, the better. And later on, you will get an opportunity to take your trading to the next level. So I'm sure many of you guys know Scott. I know we have some people from the Trader Hub and Redler All Access today. So if you don't know Scott, he's been a professional trader since 1999. He's been featured on CNBC, Fox Business, Bloomberg, Wall Street Journal, Investors Business Daily, BBC, MarketWatch. Just Google Scott Redler and you'll see him in probably, I would say, thousands of media outlets all over the world. He's completed over 50 triathlons and marathons. He's done 2 Ironman events. And I'm sure you know him best. He's head of our Redler All Access and Trader Hub program. So I think you have heard more than enough from me. So Scott, how are you doing today, buddy?
I'm doing all right. How you doing over there? Can you hear me? Let me show my. All right, boys and girls. It's been crazy, complicated times, and I hope everyone's feeling okay. I hope everyone has kind of adjusted their lives, because a lot of lives have been affected by what's happening. You know, you don't have to have the virus to actually have been affected. Whether, depending where you live around the world, it's been crazy for everyone. You know, just all we could do is really, you know, do what's in our control. I talk about that all the time. We do what's in our control. You know, you can't control the markets, you can control your keyboard. You can't control whether your kids go to school, you can control their home environment. You can't control whether your wife is upset at you. Actually, maybe you can. Be a little bit more understanding. But bottom line is, you know, we have some things that we could do, some ways we could prepare, and I really, you know, I'm going to try not to pound my chest during this webinar whatsoever. This is, you know, this is kind of reiterating some things that I've taught. But oh my damn goodness. Take a look at this screen. Did anyone download this ebook released in January? Think about it. Talk. Did you? Okay. I tweeted this. I got it out there. Mike, my editor-in-chief, put it 5 different ways. He's like, how could we get everyone's attention to use, you know, this ebook and learn your method of moving averages? Because no matter what environment, the moving averages, they take the emotions out of the trade. They give you a benchmark, they give you a framework, and they tell you what the market is doing and how it's feeling. So right here, the ultimate guide to moving average, I didn't even charge any money for this. I just did it because I'm like, hey, Mike, you know, let's take a lot of my work, put it in the ebook, and we can send it out there. And if people like it, get to know it and love it, maybe they'll want to become parts of Redler All Access. Actually, I can't take credit. That was his idea. But anyway, hopefully you read this because it came out in January. So you had a lot of time to actually embrace it and learn it. Okay, so within this ebook, I talk about moving averages as basically the mainstay in my analysis. I mainly use the 8-day, the 21-day, the 50-day, and the 200-day moving averages. The 8-day to me and the 21-day are the most important. Okay, the 8-day is very short-term trend. The 21-day is also short-term. This is where I like to live when the market's very healthy, when it's above this. The 50-day, some guys use the 50-day because maybe they don't trade as active. They also kind of trade for cash flow, but they also have a job and they're doing a little bit of both. So they can't be as active and make adjustments when things break it or reclaim it. And then you have the 200-day moving average, which is long-term. That's basically the institutional moving average. If you lose the 200-day, you're losing institutional support, means real weakness. And we went over this many different times in the ebook. Okay, this isn't just my pure approach. Like, I don't just use moving averages. I use stops. I have my go-to list. I use tier system. I set up the trades. I use measured moves. I use Fibonacci's. But this is like, you know, the backbone of my process. And I was hopefully trying to teach it for it to be the backbone of all of your process out there. Basically, depending on where the moving averages are, okay, I have a different approach. I have a portfolio approach. You guys hear me talk about that. I also have a tactical approach. In my portfolio approach, when this SPY is trending above the 8-day, 21-day, 50, and 200-day moving averages, I try and be in portfolio approach. But that's not even really the truth. I try and only be in portfolio approach when we're above the 8 and 21 day. That's when momentum's in the market. That's when stocks are making higher highs. That's when things are breaking out. This is when, like, you're a marathon runner, like me back in the day when I qualified for Boston. I can't really do it now, but so I'm like hovering over the 50 day. But anyway, when the market's very, very strong, when you have to buy fast, when they don't let things pull in, you have maybe one day down. That's when things really have momentum. What I typically do is I take 4 to 12 long positions. Usually when tech's acting best. I love to be when the market's being led by tech. And I usually don't have any shorts. In the latter part of last year, I started to have a SPY hedge on. Every time we went up for like 3 days and got extended from the 8th day, I would put a SPY hedge on. Okay, just to, instead of selling positions that I liked, I tried to make a little cute money against the trend by having a SPY hedge on. And there were points when I did those Twitter videos you guys were watching. Remember those Twitter videos? Well, I had 20 positions, I think, on at some point in February when I head out to Miami, across the board from Amazon and ways to be in Tesla and Apple and Microsoft and little ones and this and that. So anyway, when the moving averages break, when the market isn't as healthy, I adjust. Okay, I reduce positions. Then if the markets stay weak, I adjust more until finally I get confirmation. I need to just be tactical. What does that mean? The SPY broke the 8 and 21-day moving average. Typically, it has to stay below it. That shows momentum's lost. Then I start taking profits in leftover longs. I start actually just taking off weaker names that I don't like. That when I say, hey, it's time to get rid of some loose positions, that means we're below the 8 and 21-day. And if you don't have a compelling reason, get out of the way. And at this point, I actually turned into tactical, where I'm shorting some things, and I'm also, just doing 2-way trades. So when I'm tactical, I'm looking for longs and shorts. The way I look for longs sometimes is with a red dog reversal by using prior lows, which we'll get into. And then I also, on bounces, I try and sell some strength with the HL setup. So again, portfolio approach, I'm in 4, 12. At one point, I was in 20 in the fourth quarter of last year, going into February. Tactical, nothing. Just day trades, just cash flow, maybe 1 or 2 things here and there, depending where we are in the range. And that's how I stay safe, and that's how I embrace volatility. So let's take a look at something here, guys. Remember this? Okay, this is the S&P cash. This was this ascending channel that we're above the 8 and 21-day the entire time. Okay, right here, you see this 8 and 21-day? These 2 days, it broke. Okay, remember here, when it broke the 8th day? That was like a month before. Well, on that period, I also reduced some risk, because look, we were above the 8th day this entire time. Okay, above the 8th day, above the 8th day, and the 21-day if you want to be even a little less active or less exact. So riding it this entire time, finally reduced some position, gap down, filled the gap so it didn't show that the market had so much downside power. Then it reclaimed it again. Okay, and I got back into positions once again. Here, loose and wide, okay, broke the 8th day, came back above. I don't know if you guys follow me on Twitter. I was actually at the beach on that Thursday, or it might have been Chase was taking a basketball lesson, and I had 20 positions on. I got stopped out of like 7. And then it also came back at the end of the day. I'm like, oh, wow, okay. I got stopped out of 7 positions. Now I'm down to 13 positions. Then all of a sudden the next day, remember I was sitting on the chair doing a Twitter video on Periscope from Miami saying, guys, I'm down to like 5 positions. We're below the 8 and 21-day. I think this is when I tweeted this at you guys. I'm like, hey, lots of momentum levels broke in key names. Amazon broke 21.25. Okay, that's when I got out of it. Apple broke 315 to 317. That was important. Netflix closed below 380. Remember, we were trying to play it above 393. Google broke 1504, and the S&P cash broke 3342. This slide, I also, by the way, every now and then, because of Redler All Access, I take the slide from Redler All Access and I post it in the public. That Friday, I posted this. I said, hey guys, take notice. It's time to play, what did I say? Big time defense, not aggressive offense. After an 11-year bull run with the complicated headlines, you have to adjust as a professional trader. You have to switch gears if you trade for a living. This slide, along with this, told you had to get careful or be very careful. And anyway, this was 32.14. So now, here we are. You go back to this spot. Okay, look where we are. If you did not sell when we broke the 8-21 day, and that's when I probably went from 20 positions to about 5. All of a sudden, you had a gap down. I remember this was a Monday we had that gap down, huge gap. Another thing I incorporate is when you have a big gap down, okay, the way you judge the power of the gap down is whether it gets filled or not. If this does not get filled, okay, if this does not have people buy because we're on sale, it shows you power. So here's 32.14. Here's the prior low from the day after the gap, 32.14. So a break of this, if you didn't get out on these 2 days or here, that should have been your confirmation sell. And I know 32.14 isn't 33.50, but you know, it doesn't matter. That's when the trade continues to change, and that's when you have to continue to switch gears. So again, this was 32.14. And then again, right there is your momentum loss and your key levels. And then take a look here. So this is when the 21-day broke, which I went over in my moving average books. This is when you had the gap down that didn't get filled. Here's when you confirmed it by breaking 32.14. So if you didn't get out on this day, I know it was painful to get out here of whatever positions you were in. Some guys actually press shorts here. But 32.14 wound up going all the way down to 28.55. So if you sold it here or waited till here, you did a lot better than getting crushed down to 28.55. And this is only the S&P cash. Imagine what stocks were doing. And look at this, and now it's below all the moving average. And then here, all right, guys, I talk about the 200-day. First time, usually you break below it. Then you come back above it. And then here you're now below it. So if you guys remember, my 200-day moving average rule is if you stay below it and you cannot reclaim it and show power after 4, 5, 6, 7 sessions, that's your confirmation that institutions are getting out of the way. That, you know, below the 8-21 day, yes, as professional traders, we get out of our momentum longs, we get tactical. Here, below the 50 and the 200 day, you know, you have to get out of some investments. You should not be investments in individual names below the 200 day besides sectors. Okay, that's another rule. And that's, again, I'm not being an economist. I'm not talking about coming out of Harvard or Yale. I'm talking about my technical approach in the ebook that I sent you guys back in January. So anyway, now you're below the 200 day. So this is another spot to adjust. And if you remember on this day, I was like, hey guys, you know, I think I bought the VIX. I bought 300 puts. I'm like, why wouldn't we test 28.55? Remember that? I remember that. This was one of my best days actually of that month. Okay, and it was short. Yes, everyone, Red Dog, you're a permable. No, I'm not. So right here, I was long the VIX at 27s, 29s, 32s, 33s. I haven't tweeted that out. Guys were calling for accommodation here from the Fed. I'm like, what are you guys talking about? We're 12 to 14% off the highs. We didn't even retest 28.55, and you guys are calling for stimulus. And we're 12 to 14% off the highs. And, you know, China's closed. Italy's in shambles. It's spreading through Europe. We're not even, you know, looking at it here yet. So PS, that was your next spot to adjust. And if you did so, you saved yourself a lot of pain. That's right here. And then look, 22.80. So look at this. 8-day moving average below the whole time. It just, gap doesn't get filled, breaks below 32.14. You combinate confirmation of the weakness. We were doing this all in the moment. None of this is hindsight. None of this is 2020. I am teaching you this. I already taught it before, and I traded in the moment with Redler All Access and the VTF this entire way down. Okay, and right here, we were in the 300 puts. We were in the VIX calls. So into this move below the 28.55, it's probably my biggest day in the last month or so. And now we've been trending all the way down. And look where we are, below the 8-day moving average, not above when we're in a healthy market. In a market when anything could happen, a market where you have to be really, really careful. Complicated times that we've never really even witnessed before. So now, some people are like, okay, what do we do now? You know, or how could the best names in the energy field, you know, be so bad? I'm like, what are you talking about, the best names in the energy field? Look at the XLE. The XLE was below the 200-day moving average pretty much, if you look at this, you know, for months. 200-day below, 200-day below, went above for a second. So even if you bought it for a second, got faked out, who cares? Still better to get out of the way. So this was below the 200-day, which was at $50, well before this massive decline. Energy names were not healthy. Energy names were broken. Energy names should not have been in your portfolio. Now, energy names are definitely an indicator for sentiment. So you have to watch the XLE and have to watch oil. Anyway, but at $60 is when the XLE was no longer investment quality. And then if you trade with the 821 day, you could have been short every time it came up there and failed. What else? The banks. I was long the banks a lot during this time period, okay, when it was above the 821 day. And then finally it broke. If you didn't get out here, okay, but then you had a chance to get out of the 200 day. The 200 day was 29. Now look where it is. It went all the way down to what? Below 20. So what could you have seen here? You could have seen A, we lost momentum below the 821 day. B, you had a gap that didn't get filled. C, the 200 day was lost. You get out of the way. And now you have to watch the banks every day for sentiment. Okay, and then what happened? What else has been a problem spot? The Jets. Oh, look at this. Into resistance, look good, and then what? Broke the 821 day and 200 day pretty much all in one swoosh. So if you got out, followed your rules when this was below 30, this freaking thing went to $12, 11 and a quarter. You could have got out of 30. You didn't have to get out at the top. You could have got out here or even here. Or remember, you draw a line here, which was support going sideways. And then what is it? Below the 8 day this entire time. So many ways to have saved yourself so much money and made yourself so much money by not having opinions and using just your moving averages with the tier system, with your risk tolerance, with your sizing the whole way. Okay? And then everyone's now talking about Boeing. Oh my God, Boeing, after this happens, you know, one of the biggest, best companies in the world, name renowned. Okay, it was a problem since 336. Here, before the whole coronavirus, you know, you had a break below the 200 day and the 821 day. That was at 360. Oh my God. And then here, yes, you might have got faked out. Okay, but what did it do? All it did is it tested 200 day before breaking and then breaking 300, and it went all the way down to 89. What? Following below the 8 day moving average. Okay, here it was a little bit above before it broke. Tried it again, broke. This time broke for good. So by using your moving averages, A, you wouldn't have been near the financials, the airlines, or the energy names. No way. Below the 200 day. And then if you were using the S&P for your composure, whether you were in portfolio approach or tactical approach, which we mentioned up here, you could see there were so many different ways to get out of just to adjust. And that's what we do as traders. We adjust. And basically, I wanted to reiterate some of the lessons from my ebook that we did send to you guys in January and show you how all of these lessons and rules could have really helped you in, you know, when the momentum was lost on February 20th and 21st, and in all the key names. Not only could it have got you out of the way, it could have got you thinking net short or tactical, and could have made you have, you know, an awesome few months. So let's move on from here. Michael, do you just want to say hi for a second, just so I know you're still there? Hello, Mikey.
I am still here. I am right by your side.
All right, so now let's move to the charts, real time. So if you guys look at every single time that I you know, go over these charts, I like to reiterate what happened. Now this is what I post every day, real time on Redler All Access, and one of them in my public Twitter sphere. So again, this is, you could see the pro gap unfilled. This is when we broke this in the spiders. Here is when we lost the 200-day moving average, and then it's just been a trade since all the way down. So now what do we know? We know 228.02 is the low. We know today we put in a higher low. My plan this morning, if you watched me on Periscope, was buy versus the low and see if tech can help lead the way. And tech was very strong, went green first. Amazon's been better. Microsoft's been better. Apple, some days are good, some days bad. Today, Tesla finally, hold on a second, had a big move. Let's see what's Tesla doing now. Okay. What did it do? Got rejected to 200 day. All right, so let's go back real quick because I shared that the news real time. And I'm actually short some puts today. So anyway, here we are. So what to do? So I personally, you know, where I wish I could show you my face. I have a few different hats. I have my trader hat, which is what the tactical approach, and also my my portfolio approach, which went to cash in here. I talked about what I'm doing long term. So if you go to the S&P cash, I mapped out levels for everybody. Okay, go to the long term here. Okay, let's go to the 5-year. So what I thought to myself is this. Okay, let me move this stuff down here. where do I want to buy long term if I trade just long term, okay, or not trade just long term if I want to position my wife's cash account. Okay, these were the levels that I mapped out. So here is, again, you could, I write it in the morning, you could see when the ascending channel broke, you could see when the bearish gap didn't get filled, you could see when we confirmed the sell, you could see how we stayed below all the moving averages, you could see how first test of 28.55 and then broke, and now all of a sudden this is the low, this is all you know, 22.80. So some guys like Red Dog, you've been doing this before, what should I do now long term? So my wife had a cash account, and 50% of it's back in the market as of 26% off the highs. I didn't catch the low of 32% off highs, but my average is about 26% off the highs, and that's half. I will not put any more long-term money in her cash account in the market until I get more price discovery. And right now, right down 2,200, I'm probably not interested in. We get to 2,100, maybe I do a little bit more, but really either she's in 50% and stays in cash, and if we go down to here, which we can't rule out, you cannot rule this out in the months ahead, that's when I'll put in some more money long term. My son's 529 plan, he's 11. I've been putting in $500 a month since he's 5. I made it 750 starting last week, and that was right around here, right around 26%. So that's what I'm doing long term. Short term, I'm just trading like a banshee, just like everyone else on the VTF. Now here's the SPYs. Where are the SPYs right now? This morning, if you want to take a look at the 1 year, there was a nice trade. You know, tactically speaking, how do we do this? So, you know, this is if you trade Versalow. So I'll give you some of my tactical approach. When I say we're going to buy Versalow, this is your low. So this morning when we opened up down 3 points and he came in, actually got caught a little bit. You were buying this spot. So if you go to your 1 day, so that's how it's calculated. You know, this was the morning. Okay. Where are we? This is this morning. Let's see. Okay, this was the low from yesterday, 28.02, right? So let's draw a line there, and then I'll make it bigger. So again, I like to teach you like cash flow tactics, because we're going to be having to do a lot of cash flow tactics, literally, you know, for a while, and try and net money. We have to net money in this environment. So yesterday we hit a low of 228, which was now your point of reference. This morning, okay, where was it this morning? Okay, where we open right here, we came in, and you know, you could have been a buyer verse. Let's make this a little bit bigger. When I say verse, it means verse level. So here was your low. So this low was put in at 943. So listen, sometimes they say in Redler All Access, we should be buying versus a 5-minute low or a 15-minute low or a 30-minute low. Sometimes it's all different. Okay, the lows are different. Okay, so the 5-minute low that I started didn't work. Here was your 15-minute low versus a prior low. So right here, you know, is when you had your pivot. Okay, it was pretty much actually safer to then buy a higher low versus trying to try and anticipate. So here was your low. Okay, and then this morning, instead of buying, like I started buying, you know, on the way down, unfortunately, which was a little bit painful. And then, you know, right here was your higher low, so it was a little safer to then be a buyer right here with that as your stop, and this was your 15-minute low. So here's your 15-minute low-ish. You buy here, okay, maybe you added on the breakout, and then wound up going up back to 247, and then it wound up making another, actually no, yeah, made a push to 242, and then wound up going to 247 before now it's coming in a little bit. So what I would do here is, you know, if this market's going to be any good for later, I would think, you know, it wants to kind of hold here. So, you know, how could you have known to sell, you know, your morning trade? Or look at this wide range bar that took back the 8 and 21 day, you know, in this range. Okay, so right here, kind of ignited. Again, I'm talking like as if you guys know what I'm talking about. If you're technicians and you're traders, you kind of know this. This is more tactical versus what I went over my ebook. But right here, that's when, you know, you had a sideways consolidation after making that low, broke out, and then was good, and then this kind of broke here. So now it'd be good if this holds. And then at some point in the afternoon, if we're going to rally, it's going to have to kind of break this, whatever this winds up being. But this point, if it breaks below this, we could be going back to the lows. And that would definitely be a round trip. That's why you have to take trades. Take trades. Anyway, that's what we talk about. Take trades, net money. And I said I think 245 to 247 was going to be resistance, and it went up to about 246 and change. That's where it is. So anyway, that's that. So at this point, if I was doing a midday call, I would say, hey, if you're long a trailer, which I'm long a small trailer, give it to here. If this doesn't hold, then it could work its way back towards the lows, and you got to be careful. Plus at 2 to 230, you have the margin calls that come out. So again, here was your actually that was your close. So this was your buy versus the lows. Quick move, retraced. This held a breakout here actually, there, and then it gave you a nice little wedge type pattern, and then gave you a move to highs before breaking right here, which then caused another active sequence. I also say that, listen, in this kind of environment, every 15, 30 minutes is like a new day. It's a new trade. So you have to treat it as a new trade and a new day. Otherwise, you're going to give back money. And that's how you have to treat it. So anyway, let's go back to the 1 year. So at this point, at this point, what do we know? We know today put in a higher low. We know tech was kind of strong, and we have to act accordingly. Okay. Let's look at Amazon. Amazon, one of the strongest names out there, right? Here's a low, higher low, another move. I would think that this needs to kind of hold this 1857 to be good for the rest of the day. So hold on. I actually sold some puts for tomorrow. Hopefully it doesn't turn into a big red candle, but we shall see. Apple is a little wishy-washy today. Doji, while everything else is green. 237 is your new point of reference. Some people are saying, hey, where do I think Apple could go and be more of an investment? I think it could at some point get down to 215-ish, but for now we're just trading it. It's below all the moving averages. That's when it broke the 8-day. Microsoft's been a key. Microsoft made a higher low. This 135 is your new spot. As long as we hold in here, it's decent. Some say this is a bear flag. I think maybe if the market's any good, it pops into this spot. But again, I'm only buying weakness. If it breaks 135, you have 131. I think more down the road, if this continues, which it can, I think 120 is a better level for Microsoft. Tesla is it's crazy. Tesla, it's like, we made really, really good money. This is a great example of the 8 and 21-day moving average, boys and girls. Okay. Remember here, when I got long, was above the 8-day, held the 8-day, extended, you don't buy it, held the 8-day, extended, don't buy it, held the 8-day, went all the way up to here, and then finally broke the 8-day. That's your spot. When it lost momentum, get out of the way. That was 820. And then if you didn't get out there, okay, here's when it lost the 21-day. That was 755. And lo and behold, it came all the way down to 350. My goodness. Okay, above the 21-day, it's special. I call it a name. You've heard me use the word special. Special, you're holding it because momentum's there. Dips are buyable, breakouts happen, and then it goes from special to not special when it loses the 21-day. And then it turns into a sell if those of you do that. Anyway, here it goes all the way down to where it is. Where is it trading right now? It's at 412. Okay. Anyway, at this point, oil trying to bounce a little bit. Yesterday, I actually bought some calls, but I'm not going to talk about it. 429 is your level. It's got to hold 429, otherwise the bears will growl in the weeks ahead. Jets, like I showed you before. Okay, this is when the 8 and 21-day broke, the 200-day broke. So now it's trying to come off this low. Oh my God, this has been absolutely annihilated. What's that low? So each day I'm coming in and I'm saying, okay, what could happen here? Are we going to try and bounce? Is it going to be a bounce to be sold? Is it going to be a bounce to be sustained? So what do I have up? In one of my screens, I have jets, which are the airlines, okay, because that's a sentiment indicator. I have oil, because it's been crushed. That's a sentiment indicator. I look at the VIX. That's kind of weak today also to see how it's going. I've been looking at Boeing, okay, which now is trying to hold this low here. Look again from the chart below the 200-day. And then I trade the S&P. I've been selling some puts, only into extremes. I trade the Qs, I trade Apple, I trade Amazon, but you have to simplify it. Simplify it to 2 to 3 or 4 stocks, and then trade some indices. And you don't need to be in every move to make cash flow. If you look into position long term, I taught you about that before. Lots of keys into what you guys need to be doing here. Off this beaten path, some people are like, hey, what about Zoom? Zoom looks great. Okay, Zoom is held, it's above the 21-day, held to support. It looks like it's about to make new highs. That's what this is your Corona play that's showing relative strength. What else? Peloton's been pretty good too. People have been watching that. On the day the Dow was down 3,000 points, it showed some relative strength, came in there. The longer it stays above 22, maybe it gets better. So Peloton is on my list. Peloton and Zoom are like the coronavirus plays. It's 12:32. I have to start to navigate some of my own stuff. I appreciate you guys tuning in. I trade real time. I live real time. I'm up every morning preparing real time. I do a lot of this for Redler All Access and for a VTF that sees everything that they do live. I'll do as much as I can for the public as far as my small little 6:30 a.m. videos that show a little bit of life, a little bit of markets. But if you trade for a living and you need a helping hand and a guiding force, which is what I try and be, then you should definitely be members of Redler All Access and definitely members of VTF. And there are a lot of guys that are making a lot of money. And if you are one of those guys making a lot of money, just don't talk about it, because there are a lot of people out there hurting. There's a lot of people who've lost their businesses or might lose their business or might lose their job. So just because you're doing really well, do not walk around and tell people that. Just have an inner strength that you've learned a method, you've learned a process, and you've learned a way to live your life where you're in control. If you know how to trade the markets, there were a few guys this morning, I made $5,000, I made $7,000, I had my first $1,000 a day. Right? It's the only business where you're really in control of your keyboard that could actually make you a lot of money if you have a set of rules. Yes, they could take it away, you can get hurt, you could bust your account, but a lot of reasons, a lot of things I teach are trying to get you away from doing that. And we'll see how the rest of the day goes. You have 2280 now at the low. You have a higher low. So what's this? This is 2319, and we'll see, how we close. I've also been watching Europe every day to see, what's happening over there as far as that being a bit of a leading indicator. So with that said, I wish you guys luck, and hope you become members of the community. And if not, I'll definitely see you across the markets. How you doing, Mikey?
Okay, thank you, Scott. So what did you guys think of Scott's presentation? Let's give him a score. 0 if you hated it, 10 if you loved it. So rate Scott on a scale of 1 to 10. Just curious what you guys think. We got a 10, 10, 10. Scott has 10s across the board. So we're happy. We are really happy to see it. Now, we want to give you the opportunity to get Scott's content, his newsletter, his videos, his private tweets 5 days a week. So we want to introduce you to the Redler All Access newsletter, which is Scott's in-depth analysis delivered every day at 8:30 in the morning. So it's in-depth analysis, again, 25 to 35 names. This is his personal game plan with the exact levels he's watching. You also see the exact positions Scott is holding each morning. And Scott touched on before, like this idea that people called him a perma bear. But on the way down, if you were in Redler All Access, you saw him long VXX calls, long SPY puts. So he rode the trend extremely well. And this is just a small excerpt of what you would get with a note. So you get Scott's, like, the exact resistance levels he's watching, the support levels he's watching. And again, 25 to 35 names. This is just a small piece of it. And somebody just said Scott's great as usual, back to basics, which are the most important thing. And yes, that's what it's all about. I call Scott advanced basics. It's like a great boxer doesn't need 1,000 different punches. They just need a few that work really, really well. So also included live morning call and daily recap video. So you get a visual look at the day ahead. in the morning call. You know what to watch for tomorrow in the daily recap. And you see him doing this kind of technical analysis in real time, explaining the charts in real time. And this is just a quick screen grab of what those videos look like. So you see Scott on the screen, and then he'll be explaining every piece of these charts. So it's really, really helpful. Also, private Twitter feed, so you get updates as the action breaks. So as Scott's strategy is evolving, you'll get an idea of what he's doing. So just a quick look at what you could get. For example, this is where Scott distributes all his personal charts. So his entire chart book gets shared with you on the private Twitter feed, which is really awesome. And we only added this a couple years ago, but it's been hugely popular. People really love it. So regular price is $129 a month, but we love getting you guys in at lower prices so you can put Scott to the test. So you can save $80 on your first month. You can start for just $49 if you go to t3live.com/RAA. t3live.com/RAA. I'm going to shoot out the link to everybody. And if you have a question, you can go to info@t3live.com, email info@t3live.com, and we can answer any questions you have. And so what is the catch, you might be asking? And the simple answer is there is no catch. Nothing at all, just that it's for new members only. This discount is for new members only. And again, just $49, t3live.com/RAA, and you put Scott to the test, and you decide if he's the real deal. And after the first month, it renews at $129 a month, but only if you love it. You can cancel at any time, and you will avoid all future charges. So it's really affordable even when you become a full member. You can take the first month and cancel if you really want to. We don't think you will, but you can do that. We're not going to hold you back. If it's not the right thing for you, do not worry. It takes about 30 seconds to cancel, and we'll shake hands and walk away. And again, no discount code is required. You can just go to t3live.com/RAA and sign up today. So these are just some of the tweets. These were to the private Twitter feed. So you can see on the screen, these are real messages from paying subscribers. So doesn't get any realer than this. And you can see the message on the screen. Scott, last 25 minutes, you are my hero. Went from big red day to big green day, bought Google, Bank of America, SPXL, don't know that one, could not thank you more. And just the testimonials disclosure, I think I skipped over it. So just so you know, these are from subscribers to Scott's services. This experience might not be the same for you. So just keep that in mind. We want to keep everything on the up and up. And again, these tweets were sent to the private RAA feed. So around the new year, Scott was very, very big into the cannabis stocks, which were going up huge. First month as a member, CGC play is more than paid for a few months, which we always love to see. Another person sold half my CGC position that paid for a full year of Redler All Access. Happy New Year. Beyond recommendation from yesterday is paid for many months of service. Tesla, classic red dog reversal. Thanks, Scott. After digesting and paper trading your approach for 6 months, joined RAA. No surprise it works consistently using real money. Another one, new sub as of last week, just made $1,500 off the Amazon spread. Much appreciated. So Scott had a huge options trade on Amazon into earnings that paid off really, really well. A lot of subscribers benefited. This is just an example. A real person making $1,500, which we think is unbelievable. This is Sandy. Amazon turned out to be the best trade of the year. Another message. Great week. Same to you, brother. Thanks for all your early morning work you put in and share. The trade of my money for your work is my best trade ever. And that's a great way to think of it. Scott's getting up like 4:45 in the morning. He's doing several hours of technical analysis every single day. So you give up just a little bit of money, you get a huge benefit. Another message. Really appreciate your work. Huge edge for me, easily worth the money. Followed your guidance and bought CGC, Cron, YOLO, Sandal over the last few days. Thank you. Love your hard work and morning analysis, Scott. They are pure gold. Same with your recaps. So intelligent, yet very entertaining. Thank you. Got the subscription last 3 days, and Twitter access definitely helpful and gave a lot of confidence. Your pre-market video and levels are spot on. Whether I follow your trades or not, your tweets help me to trade in a calm and logical manner with conviction. And guys, again, go to t3live.com/RAA. If you're having trouble accessing the site, I'm going to send you a separate link. So you should be good. So does anybody out there have any questions? t3live.com/RAA. Any questions out there?
Hello?
Scott, we still have you?
Yeah. I actually was just trading.
All right. Yeah. Okay. So what have you been up to? Like, what have you been trading in the last 5 minutes?
I was just trading the spies because, I've been trading the spies and focusing on the spies. And, as I got off the webinar, I'm like, wow, we pulled in from resistance 246 down to 239. So I started buying some around 239.5. I just trimmed some. Now I have some, I'm back to what I have. You guys want to see a quick look at so this is, you can see here is the VTF. Can you see that, Mike?
Yeah, I'm gonna just share your screen, Scott.
Okay. So it just kind of shows what I'm doing, and shows what people are talking about. Watch, I'll say hi in the VTF. Hi. Anyone in the VTF listening to the webinar? All right. People are from all around the world. Let's see where they're from. Where is everyone from? Okay. So anyway, so you can see kind of like what you can see what I'm in, what I'm not in. So I've been talking about selling some puts lately. And what I did is, this week is I sold, you can see you can come over here, you can see I sold the 205 puts and the 210 puts to the left. I only do that at extreme points, okay? And I collected a lot of money. That's my way of being like having swing longs on. I also today sold some Tesla puts. I know it's risky, but I feel like, I sold the 350 and the 320s for tomorrow. I also sold some Amazon puts. So these were some things I did today, like Amazon. I shorted earlier. Tesla was earlier. So and with these, you can see I came in overnight. Okay, actually, this is pretty interesting because if you look here, I came in overnight short. Okay, the 210 puts. Okay, we pulled in first, if you remember. We pulled in, so I shorted more at 941. So it shows when I shorted more. And then when we went from 234 up to 243 or so, I'm like, let me cover some because I added and then I went back to what I had overnight. So I traded around this and it's working. I mean, spies, you could see before, I just came in right off our thing and I started buying. But I bought 1205, bought a 1216, bought a 1235, and then I just took some off into this $2.50 move and now I'm back to what I have. So you really see what I do live and what you see is what you get, my friends. I came in long USO first time yesterday overnight. Okay, I bought because it was on the, got crushed. So I'm like, hey, let me buy some $5 calls. I bought them for like 12 cents and 7 cents. And all morning I've been just selling them. You can see sold some at 10.29, 10.56, 10.59, 11.01, 11.02. So and that's options. Trading wise, I only traded Apple, Tesla and SPYs. You don't need more than that. So each day, depending on the day, I'm trading different names. Each day, depending on the day, I'm doing different strategies, buying. On the extreme down days into midweek, I'm usually selling puts. That's my way of buying in the hole. If we got down to 210, I was like, all right, give it to me. I'll take it. I don't care. That's fine. If we stay above it, I keep the premium. Some people are like, oh, you're selling puts. It's risky. I'm like, no, I'm not. SPYs are 235. I'm selling puts 15% below because if I was playing for a little bit of a bounce, now I have a lot of room. And I don't mind owning it there Friday. Listen, I might not want 210 SPYs in a month from now because who knows? Maybe we're at S&P 1850, but the velocity going into Monday, yeah, I'll take it. Well, I mean Friday. I'm sorry. Does anyone else have Mikey? Do you have a question that somebody wants to ask me while I'm here? As far as here's a chart. Look, we just did the spider chart. We just did the spider chart a second ago. You remember? I remember I just drew this line. That's exactly where we bounced off of. And then I drew this descending channel here when it needs to break, and that's what happened.
Yeah, so Scott, so we're getting a few questions on like your mix of day trading and swing trading. Like what are you doing intraday versus overnights?
Well, I have a day account, a swing account, an option account, and a box account. I've been trying to be flat overnight in my day account. The swing trades I've been doing is I've been selling puts way underneath the market. Okay, which we close on the dead lows. I'm selling puts 25 points below for $3 or $4. So if we gap up, I keep the premium. If we gap down, I have a lot of room to maybe add. I got caught a few times where we closed strong. I'm like, oh, let me hold a little bit for follow through, and then there's no follow through either which way. It feels like net, we're still heading lower, and we have these bear market bounces where, I'd rather not be caught. I'd rather just, day trade with the ranges unless I feel really, really compelled. There are guys in the VTF right now that are definitely, trading more names and doing more things. Okay, look at this: Reston, Yonkers, Chicago, California, Idaho, California. Pretty much everywhere. Babylon, I think this guy's from Eastern Europe. DP, a lot of Rockstar, Chade, you have a lot of my mama, a lot of characters in this VTF. But
okay, Scott, I think so. We have one more question. Do you think, and this actually comes from me and the audience, you think we should give people the ebook right here?
I'd love to give everyone the ebook. Whoever hasn't read the ebook, it's good for the future anyway. Like right now, it's a little different because we're in tactical mode and we broke all the moving average. But there'll be a time when all of a sudden we reclaim the 8 and 21 day. Then we show some commitment to it. Then all of a sudden it looks like we can be sustained, and that's when I start, adding some positions back, and then maybe I feel a bit more comfortable holding a few things. Like recently in the last few days, it seems like some stocks are outperforming. Some things are really getting flows. Some things that are actually doing better because of the coronavirus are really poking their head up. So I'm about to start maybe, being in some more longs, with the indices versus just the indices and day trades. But we'll see. I don't want to, get caught coming in when that's not the case. But I think the ebook 100%. Read it 20 times.
Okay. All right. I think, folks, that's going to close us out. Scott, as always, we appreciate your time. And folks, everybody out there, thank you very much. We understand times are tough. You're probably busy. So we really appreciate you taking the time out.
Yes. Thanks for coming in, guys. Just be careful. Live, trade, invest in your means, and take care of your family, and keep your sanity and keep your brain capital, because keeping and conserving your brain capital is going to be the most important, so you have the longevity and you can withstand the complicated weeks that we have ahead of us.
Okay. All right. Thank you, Scott. And ladies and gentlemen, again, go to t3live.com/RAA, t3live.com/RAA, and that's going to close us out. We'll see you soon.